The S&P gaining 0.8% today and closing just 6 points off its all-time high hit more than 4 months ago. The Nasdaq also just off its best level, up 1% today. And as we are getting ready to close out the month and the quarter, it's been tech and energy leading the charge. But recent moves in one other area really caught our eye today. Bank stocks have quietly been in rally mode since last week's Fed meeting. Goldman Sachs up nearly 10%, hitting a new record today. JP Morgan also at an all-time high. So with stress test results coming out tomorrow, earnings season around the corner, what do you make of these market moves, Guy?
Well, I mean, in terms of the banks, kudos to Tim and Stewart's here, which is great. But, you know, they've been very supportive, very, I think, enthusiastic about the banks. There's been one that I have been, and that is in the form of Citibank, which I think reports in the middle of July 15th or so. And you start doing back of the envelope math, and this is what we've been saying for a while. Citi, which closed at 84 and change today. Tangible book is 91, book value 103. To me, that's where it should be trading, somewhere between the two, compared to a JP Morgan, which if you look at it, tangible book there is $100. JP Morgan's trading close to 300. You can do that math. I know I can as well. So JP Morgan at 3 times book to me is probably pre-financial crisis levels. Doesn't make sense. Citi at a discount makes a lot of sense.
What are banks not pricing in at this point? It feels like there's a lot that could be the reasons behind the drivers behind this recent rally, Stuart. So what else is there?
Well, look, I think in terms of risks, it's the economy, for banks. In terms of the positive side, look, you've got the Fed, you had decent earnings, you have CCAR at the end of this week, you have SLR relief. There's just a lot of things sort of stacking up. And especially if you go a little bit down cap, that is a part of the market that folks are very underweight. And we've definitely seen flows through the desk the last week or two into regional banks and people kind of starting to engage on that level as well. Energy plus banks equals also good for small cap. So I think that's something to keep an eye on as well.
Really fascinating. And you mentioned we're within a whisper of all-time highs. By the way, God, Careless Whisper, I think, is one of your favorite songs.
I love that
Whisper
song.
or whisker?
No, Careless Whisper.
Oh, okay.
Yeah,
Tim actually covers it with his band.
About the whisper versus the whisker. Anyway.
But I do think banks are part of taking us to the next level. And I think I thought it was going to be today. It's going to be tomorrow, or it's going to be the next day. Markets are going higher. And banks are in a great environment for that because of the things Stuart said. I think the steepening yield curve is a really big part of that. I just think the fact that banks also, it's all clear in terms of capital markets dynamics. First of all, I think for people that are coming to market, I actually think there's a lot of momentum and there's a lot of pent-up demand there. I think the banks themselves are giving back more capital. I think a lot of the banks are relatively cheap at a time when people are a little worried about the move. We were doing this market broadening thing before we went into tariff mania, and now that we've come out of it, we brought tech stocks back to fresh all-time highs. I think the market is looking for some rotation. I think it's a great place to be. I like European money center banks. I think they trade cheaper. They have bigger div yields. And I know people are always worried about the sovereign story in Europe, but the same story happened over there. Their private banks essentially moved all of their bad debt to the sovereigns a long, long time ago. Those are better balance sheets, or at least as good as balance sheets as you have here.
Carter, how do the charts look? Are they strong in the banks?
Well, we have as is so often the case in many areas of the market and not different in financials and banking in particular, we have a bifurcated market. We know that the BKX index measuring big banks is toying with the prospect of moving to an all-time high just inches away. Whereas, of course, small regional banks, as measured by the KRE ETF, are still some 25% below their former all-time high, which goes back to 2021. So a different way to say those exact same things is this. The relative performance or relative strength chart of regional banks to the BKX index today made a 20-year low.
So you would fade the smaller, the down market cap
to your question about
banks.
How do the banks look, right?
Yeah.
There are ones that are, you mentioned Goldman Sachs making an all-time high. JP Morgan also doing that, whereas Wells has the prospect and soon to do that, or the BKX index itself just about to do it. But you're not seeing it, of course, in so many other areas, trust banks, and again, regionals and super regionals.
Right. Stuart, you mentioned more people are going to sort of away from the bigger cap to the mid-size, the smaller caps. That's sort of a bet on the economy being okay in the end, right? I mean, you have to be okay with where we are economically.
Yeah, I think it's a bet on, economy kind of staying strong, the deregulatory push, kind of putting its way through. Maybe this administration's a little more open-minded about bank mergers than some others have been. We got some sort of rumors or headlines over the past weekend about potential mergers. So I think it's all those things plus the value story. I mean, this stuff has lagged, and when you get to all-time highs, people tend to look for laggards.